Hello and welcome to another episode of From No Crypto to No Crypto, a cryptocurrency podcast brought to you today by Concierge Club, a mobile private key wallet and point of sale solution helping to make cryptocurrency mainstream. Let's kick it off with a market update. Bitcoin falls 10%, many other major altcoins down 20%. But when you think about it, is Bitcoin dead? Are cryptocurrencies all slowly bleeding to death? If you listen to certain news channels or rely solely on price action, these things may sell. But enough of that. However, Bitcoin and cryptocurrency is not only here to stay, but we're witnessing a revolutionary shift that's going to impact every industry in the world. Sure, there's many cryptocurrencies that will fail and not make it, but we saw the same thing when we saw the rise of the dot-com industry, the dot-com bubble burst, and what emerged from that was a thriving industry. And we are witnessing another technological shift in our lifetime with the emergence of cryptocurrencies and blockchain technologies. So, most people can pick up a phone and call anywhere in the world in a second, but if you want to send money across borders, it's an ordeal, and you got to pay a lot of middlemen just to make that transaction happen. Those days are coming to an end. You purchase a designer item only to find out later it's fake. Blockchain will change that, basically legitimizing the supply chain and reducing fraud and counterfeit. So when you look at that, blockchain is going to change everything. Every day on this podcast, I like to share news articles of businesses, financial institutions, governments, research, universities, all of them studying blockchain and cryptocurrency, not only for use cases, but implementation. And as I mentioned yesterday, you cannot separate blockchain from cryptocurrency. You hear some people in different industries talk about they're interested in blockchain technology, but not cryptocurrencies. The core essence of what blockchain is designed to do, you can't have every aspect of that without incorporating cryptocurrencies as well. So you got to think about it. They're joined at the hip. So the price today, does it bother me? Absolutely. But as I also said recently, the current price, whether it be 7,000, 5,000, or 12,000 of Bitcoin, for one Bitcoin, knowing what we know and looking at everything happening a few years from now, we're going to see that price drastically higher. All you have to do is understand the law of supply and demand and what will happen as the demand for Bitcoin and other cryptocurrencies grow. And it's obvious we're going to see a massive growth in the cryptocurrency market cap, right? Right now, there's circulating supply of about 16 million Bitcoin. It's said to be less than that based on the ones that have been lost from people that have not protected their keys, thrown away old computers that they mined Bitcoin on years ago. And when you think about that, 16 million, right? What's going to happen when there's more than 16 million people in the world that all are wanting to earn Bitcoin as a currency, as an investment? If they want to own it, the demand is going to be extremely high, and that's where you see the price skyrocket, because it doesn't matter if Bitcoin goes to $100,000 per Bitcoin. You'll still be able to one day walk into a corner store and make a $5 purchase online, one or the other, and be able to pay with $5 worth of Bitcoin, because it can be fractioned off to that amount. So it's going to be, huge. This law of supply and demand is going to come into effect. We're going to see massive growth in the cryptocurrency market cap. So today, tomorrow, the next week, the next month, 2 months, if price action remains to trend downward, it is what it is. But we all know where this thing is headed at the end of the day. So one thing I want to point out, something I came across today, there's a great website to help you understand Bitcoin and debunk many myths about Bitcoin and cryptocurrency. It is bitcoinmythology.com. Once again, that's bitcoinmythology.com. So going back to, crypto is here to change the world of finance. So if we just stare at the charts all day, we're going to miss the most important parts of the picture. So when you're investing in the crypto space, make sure you invest time into understanding how major companies and entities are aligning themselves for the long-term development of this space. If you're just blindly buying cryptocurrencies based off of what you see or what you hear online, you're going to end up, it's basically you're just gambling. So don't get blinded by greed as well. So if a coin starts spiking, sell it at some point. Have a plan. Always have an exit plan. Most people want to hold on to an investment whenever it's spiked and it price keeps rising. But at some point, what goes up must come down, what goes down must come up, unless it dies completely, which we all know is not going to happen. So when those cycles, when you're feeling really good about what the price is, have an exit plan. Either set a limit to sell or set a stop in case the price starts to fall, to where you can feel comfortable taking out some profits. Trying to catch the top of the top or trying to catch the very bottom of a dip to buy is very risky. It's kind of like trying to catch a falling knife. So you want to make sure you have a plan going into this. Don't get blinded by the potential and the money you could make. You want to see where you should sell. So you know there's a chance, you didn't take it, price starts to fall. At that point, you feel like you missed out already, so you're just going to hold it. It falls some more. At that point, you don't want to be that person that sells at the bottom. If you'd have had an exit plan, you could have easily cashed out, sold, take your profit as it dipped back down, buy and increase your holdings on whatever cryptocurrency you're holding. So there's two types of trades you want to look at: buying for the long-term holding and buying with the intent to sell. And you don't want to try to mix the two strategies. Now, if you're buying with the intent of holding, only buy coins for the long term that you truly believe in. The market's speculative right now. Most of the projects out there are going to fail. So it's safer to make short-term trades, cash out on your stable coins, or just buy long-term holds at good entry points. But either way, if you're planning on holding for the long term, make sure you've done some research on the company. And you're not just making a decision based off of something you heard somebody say. Do your own research. Make sure you're checking it out. So if you want to buy for long term, you gotta think about mistakes that are made early. Throwing money, buying coins you don't know anything about, going off of word of mouth or something you heard on a YouTube video. And last year, 2017, you hear a lot of people that got lucky, myself included, for not really understanding what we're investing in some cases, and just putting money into certain things, and they took off. Well, now we're starting to see a reckoning happen, where people are becoming more aware of the space, more experts are looking into the space, and you're going to see a lot of cryptocurrencies wash out, but there's going to be quite a few that make it. Credible projects are going to thrive once we emerge from this downtrend. But always make sure you're looking at, doing your research. Credible projects are always going to have a white paper that's going to outline what their mission is, what their solve is, what their technology is, what they're looking to do. I like now to look at ones that actually have a functional product that's going to help to bring cryptocurrency mainstream. So if you're interested in buying with the intent to sell, whether it's day trading, whether it's just trend trading, you're not buying and selling every day, but maybe on a daily, weekly, or monthly trend, you're making buys and sells. Learn the basics of technical analysis. I mentioned this on an episode recently. Some of the things you want to look at. So Fibonacci indicator retracement is a very good indicator a lot of people use, but also, there's hundreds of different indicators you can use. Some of the most popular ones I've mentioned in past episodes as well, which is MACD, RSI, stochastic RSI. And I just mentioned those not to say that you're going to learn a lot about them on this episode, but do some research on them, learn what they are, learn how to utilize them. And that's going to give you an indication of where the market may be going, right? So you also want to look at taking time off. Crypto doesn't sleep. It's a 24/7, 365. One of the things I tell people I really enjoy about that is I can hop on in the middle of the night and make some trades, because the market is 24/7. It's always open, but that also means you want to try to make sure you're taking the time away. Don't stay glued to the charts all the time. Have a plan in place. Set stop losses before you go to sleep at night, because if something happens overnight while the Asian market is trading, you don't want to be left out, holding a bag if you could have taken a profit at some point, or maybe even made a buy at some point. So make sure you have plans going into place to where you're not spending too much time looking at the charts. So let's move on and take a look at some of the top news in the markets today. So CNBC Fast Money contributor Brian Kelly, who was mentioned recently in multiple articles, emphasized today that while Bitcoin has seen a massive decline in price over the last 24 hours, investors selling Bitcoin based on the delay of SEC in approving the first Bitcoin ETF are doing it wrong. He's mentioned something about the hash rate being very high on Bitcoin the other day, and that if you're selling at this point, it's foolish, which is now you should be in accumulation phase. Whether we hit the bottom or not, we If we're not there, we're definitely close. And if you remember the way things work, if you were paying attention to anything that happened December of last year, when Bitcoin went on a run, it went from a run, increasing over $12,000 in value in a matter of 3 weeks. So when it happens, it's going to take off and it's going to be fast. So in other news, Yale Research proposes factors for crypto price predictions. So researchers are asserting that cryptocurrency returns can be predicted by factors which are specific just to cryptocurrency markets. One of the biggest factors they mentioned is time series momentum effect. So apart from the momentum effect, the Yale researchers mentioned the factor of investor attention, which is a correlation between crypto prices and the number of posts and queries for cryptocurrency on social media and in search engines. So basically what they're saying, time series momentum is as momentum builds and the price starts to rise, a lot of people, a lot of hype, a lot of attention starts getting put into the space. And that's when you see things accelerate rapidly. Again, like we saw back in December of 2017, there is going to be another run that's going to happen like that. But also just the number of searches, the number of times it's mentioned on social media and search engines shows you the interest in cryptocurrency, where many people are able to look at and create different algorithms from what's going on online, almost as a market sentiment. What's going on in the market? What is the overall sentiment that is going on? So next bit of news. So Opera, who has a web browser and a mobile app web browser, is launching its desktop web browser with a built-in cryptocurrency wallet functionality. So the new desktop version is going to work, enabling users to connect their desktop browser to their existing crypto wallet-enabled mobile app by scanning a QR code. Basically, a system that Opera has been using to synchronize desktop mobile apps for several years. So Opera does have a crypto wallet. I've been using Opera mobile browser for some time. It's a very good browser. Has a built-in VPN if you want to use that as well. And just incorporating crypto, they are getting ahead of what's going on and being relevant there. So let's see. All right, next in news, a new research paper published by an economics professor at Yale University recommends a portfolio with at least 6% in Bitcoin. That's very interesting coming from an economics professor, but basically diversification. Many people I know that have invested in cryptocurrency that have come to me for help. Even if they don't quite understand the space, many of those people understand that the value of diversification. Hedge against what are you going to do if the stock market collapses? What are you going to do if the value of the dollar starts to collapse? Right? That's why gold has been such a valuable commodity lately. People are hedging their bets against that, and they're also using Bitcoin as part of that. So also echoing that sentiment is another professor from Arizona State University who shares similar views, who's quoted saying, institutional investors are recognizing this new asset as a valued investment opportunity. This will encourage individual investors. It will also encourage consumers and small shops to start trading in cryptocurrency. That's what we're seeing happen. That is the key, is to get a bunch of businesses and, start trading cryptocurrencies. Larger institutions are starting to create cryptocurrency trading desks, trading accounts, whether they're doing it for the masses or doing it for other institutions. That's a lot that's going on. So that is it for your crypto news today. And that is what we're going to end the show with today. I want to thank you for listening in. Just a reminder, the news articles that are mentioned here are found on our Facebook page under the same name, From No Crypto to No Crypto. Make sure to find us on Facebook. Give the page a like. That way you can keep up with what's going on in the news today, and also get alerted anytime we post a new podcast, which basically the goal is to do it daily. Also, if you're wanting to learn more about getting started in cryptocurrency, we do have a book on Amazon. It is called From No Crypto to No Crypto, a beginner's guide to cryptocurrency. It's available in paperback and Kindle ebook. When you purchase the when you purchase the paperback, you will get the Kindle ebook for free. It's included in the price. Very low price book, but it gives you everything you need to know to get started, who to follow, where to set up accounts, what type of wallets to use, and just kind of digs into those basic questions that everybody has when they're getting started trying to learn the cryptocurrency space. So that is it for today. Thank you for joining in. Till next episode, we'll see you. Have a great night.